So hello everyone, please take a seat. Welcome back. I know it's difficult after lunch, especially if the session is called technical session, but it's a very interesting subject, which we can discuss here today with a great panel. For those of you already present this morning, there was a lot of discussion in the first session around the clean industrial deal. So that's also going to be the topic in this session here. This morning was more about policy. Today it's about financing and financial instruments. And many times repeated already this morning, it's extremely timely that we have set up this panel. If I were to pick one or three words only from the clean industrial deal, it would be it's about nurturing competitive manufacturers. And that's actually the compilation which we have done for this session today. Manufacturing, competitiveness at competitive prices, and how to nurture them. So what kind of support? And against this backdrop, I would like to welcome our panel, where we have Salvatore, Policy Officer at DG Grow, Access to Finance, where we have Diana from the EIF, Head of Sustainable Finance Unit, Vincent, European Affairs of Holosolis, and last but not least, Pierre-Louis Auzel, Managing Director for Growth and Partnerships at InnoEnergy, although I would also stress that your previous experience at SocGen on low-carbon solutions is equally relevant. So welcome, everyone. Let's have a good discussion for the next hour and 15 minutes, roughly, on the topic of financing, manufacturing, scale-ups. One last word in advance, there is a certain aspect about guarantees, because guarantees are frequently mentioned in the clean industrial deal. There's the InvestEU under midterm review, and it also features in the clean industrial deal. So there will be a bit of direction towards the financing through guarantees of those manufacturing scale-ups. So with this, for a round of introduction, I would invite Salvatore, explain a bit your background, what role InvestEU or guarantees or financial instruments play in your daily life, and don't forget to say what are your expectations and wishes from the panel and from the discussion with the audience, please.
Thanks a lot. Thanks for having me. I will start with the ambition and let's say the expectations for today. I think this is the right time for a discussion in order to try to.
You need to turn on the microphone.
Yeah, now it should work. Yes. I will start with the expectation for today's discussion. I think that the best would be to have let's say, open debate on how to bridge ambition with capital. Would like to get from this discussion a view on how the current instrument work, and your fresh insights and ideas on what else would be needed, for the next future. Also, in the light of this new piece of policy that are out. Let me just start, as suggested by Arne, to say something on InvestEU. You know that there was recently an interim evaluation of the program. I'm not going to take too much time in order to go through the whole interim evaluation, but I think that there are some aspects and some points that would really make sense to highlight in this context that are also particularly functional also for the needs of the clean industrial deal. So as one of the main aspects that I would like to touch is the fact that InvestEU managed to gather in one single program 14 different instruments that were scattered under different legal bases. This is an amazing advantage and a big step forward. Also the operationality of an instrument that should support financial initiatives. In terms of performance, the interim evaluation showed that the program is well on track on its own implementation, that so far managed to mobilize 280 billion, out of which more than 200 are from private sources. So it really shows that it is properly working. And also the EU added value of the program has been shown in this interim evaluation, and in particular in enabling implementing partners to engage with riskier counterparts, or to engage with in riskier operations, or to provide riskier type of instruments that can be venture debt or direct equity type of investment. I'm just mentioning implementing partners. I think it is one of the key aspects of the program, and that I also would like to see it also in the near future. That means the open architecture aspects of the program and the involvement of international financial institutions as well as national and promotional banks. I think that this so far is one of the most remarkable achievements. So the way that national promotional banks and other international financial institutions, apart of course from the EIB group, that is our trusted partners, managed really to integrate in the program. And with the double benefits of fostering an alignment between the EU and our implementing partners on new priorities on the one hand, but also for the benefits of the program to better serve the needs of the local markets, to better target and to better reach also the counterparts that are in highest need of support. I don't want to spend too much time. I would just to add maybe a couple of more things. The first thing is also refers to the use of the financial instrument in let's say in matched, or let's say blended with other type of support. This is the case of the blended finance that is also working pretty well under the program, and it allows sectoral programs to contribute to increase the budgetary guarantee of the program on the one hand, but the program itself managed to combine sectoral resources or grants also with the budgetary guarantee of InvestEU. And third, InvestEU as a platform for blending instruments even without the involvement of the budgetary guarantee of InvestEU. This is the case of the CRM exploratory facility. Just last point, what can be improved? In terms of improvement, I think that's one aspect that I didn't mention, and maybe we can mention further after, is on advisory aspects. So the advisory that should be given more visibility is a very effective activity, but maybe it's not as perceived as so important from the wider audience. A second point, in order to boost blending, and this is also would be important for the next MFF, I think that an important point would be also to make the blending a bit more simple and to operationalize it a bit in an easier way. And last but not least, I think that would be important to build on the existing legal and contractual arrangement with the implementing partners also for the near future, not to necessarily reinvent the wheel. That's it from my side.
Okay, thank you very much for this introduction, Salvatore. Diana, over to you. Same questions to the beginning, your expectations, your background, and your take on guarantees InvestEU financial instruments, please.
Yeah, thank you very much. So my name is Diana Patrascu. I work at the European Investment Fund. For those of you who don't know the European Investment Fund, we are part of the European Investment Bank group. We are actually the biggest implementing partner under InvestEU. As my background currently, indeed, I am the head of sustainable finance unit in the product development. So basically, I'm handling the product development on everything that is related to sustainable finance within the EIF. And before I joined the EIF in 2020, exactly at the design of InvestEU, I was in the team that was designing and was discussing with the European Commission the InvestEU setup and the products. And indeed, as Salvatore was mentioning, the InvestEU hosts under one house, under one platform, several financial instruments that basically are looking across the whole range of companies. We, as the EIF, we are specialized, so we are the finance risk specialized in SMEs. So this is our specialization, SMEs. So basically our financial instruments target SMEs, and under InvestEU we developed products that look from very early stage venture capital. We have then also financial instruments to invest in private equity funds. Then also we have the infrastructure funds for the bigger infra projects. And then going up to the debt products, so guarantees. Maybe also worth mentioning because again, for those of you who don't know us, we have an intermediated business model. We never invest directly into companies. So our ultimate goal is to, for the financing to go to SMEs, but we do it through our financial partners, which are either venture capital funds or private equity funds. So basically, equity funds on the equity side and on the debt side, and financial institutions, and also alternative lenders. Then, what are my expectations? My expectations are I would like to hear from my fellow panelists indeed what is needed, what we can improve, where there is, to learn where there is more need in terms of financial instruments and what we can do for the future.
Thank you. It's actually very timely then to hand over to potential beneficiary. Vincent, over to you.
Yes, good afternoon, everybody, and thanks for inviting me to this panel. So I'm head of public affairs at Holosolis. Holosolis is an industrial startup, and our goal is to build a factory that will produce PV modules and cells, around 10 million PV panels per year, which is enough to solarize around 1 million homes every year. So it's a pretty big project with a large investment. It will represent around 2,000 jobs by 2028. Our goal is really to reshore manufacturing of PV in Europe. As you may know, we had previously, we still have some small factories in Europe, but we depend a lot from importation of PV panels. 99% of the PV panel deployed in Europe right now are imported from one single country. And from this country, we are highly dependent. And if we want to achieve our energy transition, we need to electrify a lot of usage, like transportation or heating. And PV is one of the fastest and easiest way to deploy, to have renewable electricity. So we cannot be that much dependent on such a strategic sectors. Of course, as you can imagine, the PV market is pretty competitive, pretty aggressive, with competitors who receive lots of subsidies. Even with that, they are selling under the production cost, so highly competitive. And that's why we need a lot of public support at European and local level to restore a level playing field in Europe and to be able to have to reshore manufacturing in Europe. So that's why we are really interested in every kind of support we can receive, and in particular InvestEU for helping us to finance this project. On my background, I have no experience in financing, I have to say. And in our expectation for the panel, that will be to understand more what InvestEU can do, what InvestEU is doing right now, and what it can do in the future, and have this open discussion.
Pierre-Louis, I know you already, so while you present yourself, please allow me to pick up.
Thank you. Hello everyone. So I'm working at InnoEnergy. Let me introduce InnoEnergy for those who don't know us. So we are an early stage investor in energy transition. And when I say early stage, we mean really early stage. I mean, we have 180 lines in our portfolio, 180 participations, starting from pre-seed, seed, and up to Series A. We even start companies from one person. I mean, that's a very early stage, that the most early that you can see. And on that basis, we have, and Holosolis actually is part of our portfolio. And on that basis, we have a quite wide experience with the challenges of early stage financing and equity raising, with both technology innovators, but also large-scale industrial projects. Vercor, for example, which is quite well known in the gigafactory, battery gigafactory in France, was born out of InnoEnergy. So we see both technology, the challenges of developing technology, startups, but also the challenges of financing large-scale projects above 1 billion, 2 billion euro, name it. And preparing for this discussion, I was thinking of a conversation I had recently with a very large investor, asset manager in Europe, one of the top 3 in Europe, so people managing trillions of euros. And we were discussing where can we work together. And so I quickly realized that of the trillions of euros, private equity, in the private equity pocket is around 1%. But it's still above 20 billion, so it's okay, we can still talk, it's a big number. And then we came to, okay, if we take away real estate and LBOs and whatever, and also offshore wind farm, because it's quite established infra, what is your early stage pocket? Well, our early stage pocket is 2 billion, okay? Fine, let's talk, 2 billion is still a nice number. It's 0.1% of the totals I manage. So this is also, it's a big number, 2 billion, but it's only 0.1% of what this top European asset manager can contribute to early stage energy transition. And then we went into the detail and we introduced a few transactions. And the feedbacks were, oh no, sorry, please come back at the next round because we want certainty of revenues. Our investors, the LPs, people who give us their money to manage for them, want certainty of revenues. Which means that all the projects which don't have certainty of revenues today, we cannot look at them. And in our portfolio, I mean, many of the companies are looking at revenues in 3 years' time, not today. And here, I think I make the link to a comment done earlier today during a panel by Craig. In Europe, we have a big problem in financing pre-revenue, and I don't want to go into Series A, B, and C because this is a bit a moving criteria. Pre-revenue companies have a very big challenge when it comes to raising equity, and not to mention debt. And I think I will stop it here, but I think in the discussion we're having now, I think we have to address how we bring those very large investors in providing more money into that category. So Craig was saying 50 to 200 million euro of equity raising. I would start it at 20 actually, from 20 million euro already in Europe. When you are 3 years away from revenue, it's a big challenge. That's it.
Okay, thank you very much, Pierre-Louis. Before we actually look into where to find cash and whether it's 20 million or 50 million up to 200 million, I would actually like to play the ball to the panel here about the needs of those manufacturing scale-ups. Yeah? You have already given a financial bracket, but Diana, how would you say in terms of types of financing when you think from your professional life, manufacturing, climate tech manufacturing, what are the needs in terms of money and size?
Yes. No? No? Yeah. Well, it's, you know, I had an answer, but now listening to Pierre-Louis, you know, because basically he's going very much into, okay, how do we do with the venture capital, with the very early stage? And I think we all agree that resources are scarce. And basically, the problem that we have is not that we don't have financial instruments today. I think we do. I think we have so little of them. And in all of the, you know, like, of course, it will always depend on the stage where the company is. So if we start with a very, like, innovative, you know, you want to invest into very innovative, new technology. So here is where basically the venture capital comes into play. And what we do at the European Investment Fund, we are an investor in clean tech, like a pioneering investor ever since 2006. And in the last 5 years, we accelerated a lot in this policy area, and we have invested in over 60 funds with well, 1.8 billion investment. This is only for clean technology. So these are, you know, funds that are only in clean technologies. But this is not enough, and we know. But then, when you're talking about scaling, so when you scale, then there is, I mean, you can either argue that you know, you need more, and this is another thing, that we need more equity financing for the growth stage and for the scaling, for the scale-ups. However, we know, I mean, no, it can get to at one point quite costly. So then you need to look more into the debt area, and I think both of them, depending on, of course, on where the company is and on their capacity, both of them are relevant. So on the debt side, we have the venture debt that also Salvatore was mentioning. This is EIBs, but then of course it's important, and I think we all seen also what Clean Tech for Europe was saying, that you will need to help this scale-ups. There is a problem with the funding on the scale-up stage, and I think with manufacturing, exactly when you're going into you know, like the scale-up and growth, you will need also debt financing. So I think it depends very much. I think there's a need of all of them. I think there are instruments today, but there's not sufficient, and this is what we see. There's not sufficient resources to really breach the scale-up phase.
Mm-hmm. Okay, Vincent, I've already seen you nodding. Do you have something to add?
No, I mean, I definitely agree on the early stage approach. I don't know if there is already some tools in place or not, and what we can expect. But in our situation, that's clearly the one of the points. So I can maybe different now or a bit later, but
okay, very good. Any more remarks on that? Pierre-Louis, any view? Salvatore?
Yeah, I fully agree with Daniela. There is a lot. There are many instruments, fully agree. But most of them come too late, or they will come pari passu with private money. And because, as I explained, private money allocation to high-risk situations, I mean, pre-revenue is close to zero. When you say, okay, we do 1 for 1, when it's 0 for 0. So just to make it a bit of a characterization, it's still very, very small. And I also try to think about this in a more broader term, not to be, because there are many instruments and there is a lot of technicality in the way that InvestEU works. And actually, it's a very versatile instrument. InvestEU is doing many things with various ways and many structures. In the way it helps the implementing partners to deliver to the market. But if we take a step back, I was thinking, what are we doing here? Most of the cases, we on the ground, at the project level, the support comes pari passu to private money. Which means that we are coming, providing a support on conditions which are to satisfying for people expecting a return on investment of 20%. Maybe for debt it would be, I don't know, 12, 15%. And for that we provide support through instruments, through EIB, which is funded at 3%, 4%. And there is something in terms of economics, which maybe you were mentioning scarce resources. Maybe there is an optimization here, because we are using a very smart and complex and very comprehensive system, which at the end is providing support for 12 projects from which we expect 20% return, with the funding at 3 or 4%. Somewhere between, there must be a way to have a better optimization and allocate our resources. We don't need to have a 3 or 4% cost of funding. We could support the project with a 6 or 7% cost of funding. So what I'm alluding to is that maybe we could have, there was yesterday this mention of a decarbonization bank. I don't really know what there is behind that. I would love to know. But maybe I don't know what it means. Maybe the resources for this decarbonization bank should not be funded at 3%. Maybe we can allocate less guarantees from the budget, have the funding at 6 or 7%, and provide support in projects with expectation of return which are not lower than the 15 or 20% I was mentioning. I don't know, Salvatore, how you would react to that.
No, I mean, I completely agree. I mean, that's, yeah, I completely agree. And this also points out to the fact that in a situation, as Diana was saying, of scarce resources, having financial instruments would ensure like higher multiplier, and then having also the possibility to satisfy, bigger, demand of this type of funds. On the other hand, what I wanted to mention, I wanted also to refer to what you said before concerning the asset management and also institutional investors. That also within InvestEU, and also Diana can say more about it, we're also piloting some instruments to stimulate also the involvement of institutional investors in so to have them in the picture, so to try to increase, somehow the mass of resources that can be mobilized. This is the case of Escalar. And one more point that I wanted to say is also that concerning the support for early stage companies, what I really see crucial to deploy additional services, let's say complementary services to the access to finance, proper access to finance, in order to support and to accompany those type of companies in better understanding what are the needs and how to tap into the resources that are available in the market. Again, I'm referring to advisory type of services that are not, to me, in my experience, in my opinion, are not for the moment exploited at the right level as they should.
Vincent, have you ever, Diana, you would like to say something on advisory? Vincent, did you ever have experience on advisory services?
It's pretty difficult, I have to say, to understand. Well, if we look at InvestEU program, there's a lot of things and a lot of useful tools, but we don't have direct access to InvestEU. That's what it's made for. So we need to go through the partners, and sometimes it's difficult to know in all the products that are talking about what is linked to InvestEU, what can we do, what we cannot do, and sometimes when you see I would say some products in InvestEU, you don't find them in what they are proposing. So I think it's a bit difficult for us to understand, to make the link between what are the propositions we received, the discussions we have with some investors, or it can be public bank, and InvestEU, for example. And on the consulting, it's a bit the same. Sometimes we don't see the link about what they are proposing to us, the discussion we have with some partners, and what is proposed under InvestEU. So I completely agree that there should be more involved in the discussion.
So we have by now quite some feedback about, which I would summarize as, in terms of instrumentarium, pretty much okay. The discussion keeps to be coming back to where should the cash come from, and can the existing cash be used more efficiently? Question to you, Salvatore, what are the considerations at DG Grow about additional sources of money? Where would you be looking into?
Yeah, as you might note, yesterday, together with the Clean Industry, there was also the publishing of the Omnibus InvestEU regulation, which is a proposal that aims at increasing the capacity of the budgetary guarantee of InvestEU by 2.5 billion euros with the provisioning rate of 40%, which means 1 billion euro more. And these additional resources would aim at mobilizing additional 25 billion euros that will target the emerging priorities of the EU, which includes also those identified under the Green Industrial Deal. Other resources will be mobilized also from other technical adjustments that can be done at the level of portfolio merging, so coming from the legacy instruments that were were established before InvestEU, for a total of then 50 billion as an estimation to be mobilized. This is one aspect. As a second aspect, for the cash, of course, that we also need to tap into the resources that are available at member states level. So we invite and we pushed, again, under the communication, and invite, member states to contribute the member states compartment of InvestEU. And in addition to that, this omnibus text on InvestEU also foreseen the possibility of member states to contribute to funded financial instruments. Those are very important in specific cases, like in the case of equity type of support. As a last point, I would like to mention that now we are already in discussion for the next MFF. So as you know, and it was also mentioned under the Clean Industry communication, there is going to be a competitiveness fund whose aim will be to cover the whole investment journey and to ensure a seamless support to startup and scale-ups along the whole investment journey. To that, all the toolbox, all the available tools will be activated, which means grants, which means guarantees, loans, equity, procurement, and so on and so forth. Again, don't want to scare you. As I was saying, we will, in the case of the financial instruments, we will much build on the existing legal and contractual arrangements. So what is going to happen that's in this new fund, the idea is really to liaise and to link better the existing instruments in order to foster this seamless journey. Last point that I want to mention is that I invite you to participate to the open public consultation that we launched a week ago on the new MFF, and in particular on the competitiveness aspect. You just have to type on Google EU funding for competitiveness OPC. Your contribution will be more than welcome. Thank you.
Okay, thank you very much. Noted. Picking up on the seamless journey, what would seamless, anyone wants to comment on what would seamless mean from your perspective? And how long the journey is, from where to where?
I don't know how to answer your question, to be honest, but unless you want to jump in. I think, but Vincent would be better placed to answer. I think the idea is that, if I understand you correctly, is that you want to simplify the journey for, let's call them the project, and probably not have to repeat everything from step to step. One other component, obviously, is the time that each step takes. We know that someone was saying earlier today, I mean, obviously time is money. And when you are a project, time can make you irrelevant at some point. So what I would expect, I would hope that for the project, that this seamless journey also comes with a faster journey. So that we don't have to, I mean, each round in our project takes 18 months, clearly, maybe 2 years for some time. The best projects succeed. I mean, they end up being financed, and you may consider, okay, it's part of survival of the fittest, and only the really best will survive, and you are sure they are good projects. Now, maybe some excellent project, because it takes too much time, they just become very good, because competition has developed, because other technologies have developed, or because the markets have changed. And some very good projects, well, they just disappear because it was too long. So seamless, yes, it's good to have the contacts, to have the connection between, but we need also to have each step to be faster.
No, I can continue with this. I should have reacted before, but I was not sure what you understand by seamless journey. But no, I definitively agree with you. We in our process. Well, as I said, we are an industrial startup, so we have different rounds of fundings, from single-digit million euro for the seed, 2-digit million euro for the Series A, let's say, to be able to pay for the detailed project, the design of the factory, and then Series B, 3 digits million euro, to have the funding for the construction of the plant and the equipment. So it's really always different tasks, but at each step, we need to raise money and we need public support at national or European level again. And then you have to, there is a lot of place where you can request for support, and every time you need to develop a new file, a new submission, and it takes a long time. And honestly, I have to say that I would say that half of the energy of the project is to make submission for this support. And you cannot always use the same, you can't never use the same files, and it's the same data at the basis, but you need to rewrite everything and to do it in the specific form of this or this submission. So maybe there is a room for harmonization on this, and as you say, to speed up the process. Sometimes we have some meeting with potential institutions that could help us for guarantee, for example. It says, well, come back in, we were just discussing this before, come back in 1 year, and in 1 year we can open the file, and will take 18 months. In our planning, in 2.5 years, the company, the factory is built, and we open the production. So it's not a good time frame, and with some specific maybe support at a specific stage, we should be able to gain a lot of time, and sometimes not just to be ready in 2 years before, instead of 4 years, but it's more, as you said, a question of the reality of the project. If we bring an innovative topics in 4 years, not the same as in 2 years, and can be just a good project in 4 years, where it's really relevant in 2 years. Especially, in our case, in PV modules, it changed a lot. If we produce TOPCon modules, which is our plan, in 10 years, there'll be no point in producing TOPCon in 10 years.
Maybe just to make a bit of a connection between what Vincent was saying, that he's saying, well, when we need InvestEU, we don't know where is InvestEU because we can't. I mean, it's not like we can, and indeed, it's not. This InvestEU is the means, but then it trickles down through. So first, you have the implementing partners that Salvatore was mentioning. So it's it's the EIB, it's the European Investment Fund, and you have also other implementing partners, and then, depending on the line of business, in the case of European Investment Fund, then there's another, because then we work through our fund managers, and then basically we invest alongside private investors in equity funds, so that then they invest in the companies. And it's clear that, and it's not the first time that I hear there's a bit of disconnection in the sense that for the companies, the ones that actually we're helping, they sometimes don't know where to go, where to find the help. And I know that the European Commission does have a platform where basically you can see by country, the access to finance, so what kind of support there is. But also I was thinking on what you were saying, Salvatore, on the capacity building and on the advisory side. I think we should maybe work together to do, like a lot more connection between who is the funding provider and the companies, because for sure this is something that would help. And as I said, I don't think it's the first time, and I think advisory could play a very important role, and on all the in making the connections, basically.
Mm-hmm. Could you share a bit already on the role of advisory at the EIB group today for your work?
I mean, we have been quite active under InvestEU on the advisory side, specifically on what we call let's say the newer projects, and they're actually quite fit for purpose here because they are in the sustainability area. So basically, because we have. So the EIF has defined what we consider as climate action and environmental sustainability. So basically what we consider as eligible under the sustainability products. And in this respect, apart from, because we do webinars for our financial intermediaries, but apart from this, we have these online tools. On the equity side, we have an online tool that is called Green Guide for Fund Managers. And basically, the fund managers can go there before their, so even before making a proposal to us to see, what we consider in all of the let's say taxonomy pillars. So basically you can see what we consider as green financing for circular economy, for renewable energy, for, I don't know, even biodiversity. So it's quite, you have a list of everything, and then how, the fund managers can select to see how much of their future investments could go into this area. So this is one of the things. And then we have also on the debt side, because we have a flagship guarantee program for the, so this is for debt instruments, so basically loans, investment loans. Here we have a tool that is called the Sustainability Guarantee Tool, and then you can do yourself the assessment to see whether this investment would qualify under our support. Generally, we say because we work, so there is this intermediated business model. So we say that the support is for the financial intermediaries. However, all these tools are open source. So even SMEs or the companies, if they want to understand a bit more, they can see that.
Mm-hmm. Okay, thank you very much. Before opening the floor to the audience, maybe a quick round of reactions from your end. If you were to look at financing landscape, special focus guarantees, what would you say to keep, and what would be your one recommendation to evolve into? And then we open the floor to questions. Who wants to start?
I think guarantee it's a good tool. I mean, obviously for our project in our business plan, it's really important. As a startup, we are an industrial startup, so we have no products and no proof of concept until we raise a lot of money, and then we can start producing. So it's really difficult to convince investors to give you money, and that we will not lose money. So it's really a good tool, but maybe it arrives a bit later in the process. I would come back to the early stage discussion that we had for the seed round, for the first round of raising fund that we had. Even if it's few million euros, it's really there's still this question for investors that they don't want to lose their money, and if you have a product to guarantee some equity at early stage, that would be really a game changer. Speed up the process. You can earn years of discussion with investors. It can be really a game changer for projects.
Just to react on that last point, it shows that we can see the positive value of going faster. It's value creation. I mean, if your project happens 1 year earlier, there is a lot of positive consequences for everyone. And on guarantees, there have been some progress. Recently, we saw some very interesting ideas. EIB announced a few months or weeks ago a 500 million euro guarantee system to guarantee bank guarantees for equipment manufacturers. It's extremely useful for working capital purpose or guaranteeing performance bonds, that kind of things. Well, as a former banker, I know that it's very helpful to unlock support from the banks, which at an early stage when equipment manufacturers are very happy to sign a contract with someone, with a client, but then it becomes a problem because they don't have the performance bond or the bank warranties that they need to really confirm the contract. This morning there was a mention of PPA guarantees when the off-taker is an early stage. Actually, we have also given some thought on similar things when you have an off-taker which is itself a startup. If you are a cathode active material producer and your client is a startup battery manufacturer, your off-take contract is useless basically. So maybe there are things to be done around this idea as well. Obviously, many people dream of a blanket, a big off-take guarantees for. I think when going to the question of how best to use the financial resources of Europe. I'm not sure it's the best use. Maybe this should be managed by mandates or regulation rather than pure. It's not very efficient to guarantee a 5 year of future sales, to make it simple. But guarantees definitely is probably an area when, as mentioned, there are some good ideas. We can maybe find some others.
I can react more on a program level. I think it's for the Commission it's important, to have in place the right instruments at the right time. For this, the interaction with the implementing partners, with the financial intermediaries, with the stakeholders is key, is super important. But this is not enough, because the program should also allow for emerging priorities, to be put in. And this is what, again, InvestEU, showed that was possible and performed really well. We have some examples. For instance, last year we managed to include the priorities of the Net Zero Industry Act as well as of the Critical Raw Material Act as part of the policy priority of the program. It's also thanks to InvestEU that the EIB also managed to use the resources, the part of the budgetary guarantee to deploy the counter guarantees for the wind industry. So those are all emerging priorities, emerging needs. That's a program, should be able to tackle, but of course, only if the program has this flexibility built in from the beginning. I think this is an important lesson.
Diana, last comments? Immediately. Okay, then I would open the floor to the audience. You have heard, we have a question here. Could we start over there? So we've heard from Salvatore in particular, the flexibility adjustment to emerging needs, the request to share how to bridge ambition with existing financial instruments, and also beyond. So please state your name and your question, and to whom.
Okay, hi everyone.
Yes.
A very interesting microphone. I must say it keeps a bit uneasy, but my name is Julia Reno. I'm working for Breakthrough Energy, and I'll be speaking on the next panel. First is, I certainly did want to congratulate Holosolis, because you are definitely in the race of where we need more industrial startups and scale-ups. And you mentioned, Diana, the Clean Tech for Europe report that showed one of the challenges being equity raising at the earliest stages, but also debt raising when the companies start to grow. So just mentioning here around Clean Tech for Europe being the voice also of these scale-up companies. I wanted to share 2 examples of public-private partnerships that I think would be interesting for this discussion. One of them is indeed with the European Commission and the EIB group that we have, which is called the EU Catalyst Partnership. And here, this is solely dedicated to demonstration and first-of-a-kind projects. So the real ones that are, as you were saying, Pierre-Louis, the challenging of where you need sort of 60, 100, or close to even €1 billion euros of investments for these first-of-a-kind plants. The way we've set it up, and InvestEU is definitely the instrument that has led us to be able to do that, the partnership is the following. We as Catalyst have raised 1.5 billion in the form of grants and equity, solely focused on these demonstration and first-of-a-kind plants, SAF, green hydrogen projects, and many more areas. Second piece is the European Commission and the EIB. They provide money in the form either of guaranteed debt via InvestEU or in the form of grants also channeled through the InvestEU. And that, I think, is the combination of being able to provide for these projects the blended capital that is needed and the type of de-risking. I think that is certainly a model that was mentioned in the Mario Draghi report as being a best practice around how do we combine the different types of capital, but equally the best of our institutions. And you mentioned a lot the technical assistance from the EIB. This is, I think, something that I'll mention, but the importance of having the right teams on the giving side or on the structuring side to be able to provide that type of advisory service is absolutely critical, and that's the partnership. The second partnership, and I'll be quick, is the H2 global model, where here, indeed, I think we've all mentioned around the challenge that we have of having producers needing long-term off-term contracts and then the off-takers needing to not take the risk, a price risk for 10, 15 years. And the role here of blended finance, of public finance, in institutionalizing this capitalized market intermediary to help de-risk. What does it do? 10-year offtake agreements for the producers, and then 1 to 5 year offtake agreements for the off-takers. I think there are, my point is, I'd be keen to hear from the panel on what is the use of, from your perspective on these types of public-private partnerships, and also just hearing perhaps from the Commission on how do we scale these models rather than trying to reinvent. So how do we make, again, best use of these best practices for the purposes of Holosolis and many more?
Thank you, Julia. I think there were questions to the panel. Salvatore?
Yeah, I can reply. Yeah, I mean, when I was mentioning this example, or let's say the idea of blending, so the possibility then to blend the grant parts with also the budgetary guarantee of InvestEU, I was referring implicitly to the EU Catalyst breakthrough energy pilots. Yeah, I think this is an interesting example of blending. The idea would be for the future really to rely and to build on what is existing and possibly simplifying where possible the merging and the blending of the resources coming from different programs. I think that, that within the different programs of the current MFF, I think that InvestEU has been the best performing in terms of blending resources from different programs and different sources. So I think that the idea is that we are not planning to step back from this type of commitment, but to go ahead. So say that, of course, you also know that the building of the overall operation of the overall instrument was not let's say deprived of issues and hiccups. But yeah, I mean, this is part of the game, and yeah. Again, this is also another part where advisory aspects, can also play a strong role, by the way.
I mean, on my end, I will not speak on behalf of the European Investment Bank. Indeed, this is their product is a very successful one, and it is given as an example in very many cases. What I can say is that on the EIF side, because we're targeting much smaller companies, so basically we're looking at the SME spectrum, and we have the intermediated business model. So basically we do everything through our partners. So we guarantee banks, for example, so commercial players that are on the market, that are close to the SMEs. We give guarantees for them to then give loans to SMEs, and this is a model that is very, so when it's it's very streamlined, it's very fast, because once that we have this guarantee instrument in place with the commercial banks, then they can originate loans to SMEs in accordance to their credit and collection policies. However, with the AAA guarantee, so then the risking is at its let's say best at its best indeed. However, it is in there, so they will do, as I said, within their credit and collection policy. So it depends very much, of course, if it's also a market driven. So if they can select between, different type of companies, in the end, the banks will do in accordance to their policies. They will select probably the most viable ones. So yeah.
Okay, so thank you very much, Julia, for those two suggestions on not radical improvements, but further developments and your comments to that. Are there more questions from the audience? Yes, please.
Thank you. Yeah, just one question. So Vincent from RTE, the French TSO, Transmission System Operator. So this morning we talked about investment in grids and huge, massive needs. So there's a question of the supply chain and investments to supply all the equipment needed. I'm not talking about very innovative equipment. There are, and it's important to support that, of course, but also there are mature industry cables, transformers. Do these instruments you're talking about for de-risking investments, can they apply to more mature industry, which are not SMEs in sometimes, which are not innovative in the way that the different tools may define that. Either some hope that all these instruments would help also this major industry we need in Europe that can create jobs and also make all these investments in the grids more acceptable for the community.
Maybe I can start a bit. Under InvestEU, when we say about these 14 financial instruments, is indeed because they are targeting several. So you will have the SME competitiveness, for example, guarantee that we have at the EIF. So here we're looking at riskier companies, but it's just for the risking, for financing their needs, regardless whether they are very innovative or whether they are green and so on. So this would be one of the guarantee facilities. Then of course you have the sustainability guarantee, where we're looking more into what is sustainable finance. And the innovation guarantee that would be very much into the innovative spectrum. So so the instruments do apply to other. It's not only very innovative projects. The innovative projects are covered by the innovation. So the ones, because each of that's why basically we have 14. It's not that we wanted to have many, but we needed to capture a whole lot of industries and companies that we wanted to support together with the Commission, of course.
Maybe reacting to this, it's an interesting point actually that in some cases for decarbonation, we need to consider the needs of players which are actually not at all startups, but very established companies. And I had a conversation yesterday with an innovator, or let's say a startup, but not early stage. I mean, they're already well established, have revenues, etc. And they were telling me that for them the challenge is that their clients are blue chip clients, blue chip companies, very rich. They can afford, and the type of, let's say, to put a number, we're considering a 100 million euro project. They were telling me, okay, if they do it the traditional way with existing technologies, maybe it will cost them 70 million. If they do it with our technology, which is very efficient in terms of decarbonation, they take a risk on our technology. It's going to cost them 100 million. So someone in the blue chip company has to make the decision that yes, decarbonation is important. We're going to put more money. Maybe they can decide it because it's worth it. And on top of that, we don't know if it's going to work because it's a new technology, which obviously has some background, but it's not yet proven at this scale. And so it's a bit different, but it's kind of similar to you. I mean, to your point, that it's true that in helping for the decarbonization of industry, because this blue chip is part of our industry, and to decarbonize this industry, we also need to find a solution to convince, and maybe it's on the form of guarantees, to convince them to make the jump and introduce a new technology rather than rely on the existing one. And that was an interesting comment.
Yeah, just to complement what other speakers said, I will mention again the InvestEU case. So in order for an activity to be eligible to the support of the InvestEU instruments, there are, let's say, mainly two conditions to be fulfilled. The first one is that this activity should fall under one of the policy priorities. And this is clearly the case of companies that are operating in the field of grids and on cables, because those are elements that are part of the Net Zero Industry Act and so on and so forth. The second element is the additionality. So basically those projects should comply to this requirement based on which support should be provided to cases where there's a clear market failure or a suboptimal investment situation. So this is, let's say, a proxy of the risk, the importance of the resources of the EU to support those activities. And for this, I mean, we have, as part of the InvestEU program, an investment committee whose main task is to analyze the additionality requirement, how it is fulfilled by the different projects, and authorizes the implementing partners to basically to make use of it. So I would say then it's not only a matter of innovativeness, but is of basically of being consistent, with the policy priorities and also complies, with this additionality requirement.
I think we would have time for one more question from the audience. If there is none within the room, is there anything online, Kate?
Yes, I think we have one question online on InvestEU and the role of the member states' compartments as potential reallocation mechanisms of natural resources.
Okay, I think you have already alluded to that, Salvatore, but if you could complement further.
Ears, all the member states that are connected and that are present till today to think on the opportunities that the member states compartment gives. You might also know that recently there have been also some adjustments in the functioning of the member states compartment, in particular on the DNSH aspects, the do not significant harm aspects, and also clarification on the application of state aid provisions. In addition, as we heard now with this new proposal that we will hope that they will be approved by the co-legislator soon, there will be also these additional possibilities to contribute to funded instruments under the member states compartment. So absolutely, we think that is a very good tool. So far, 6 member states contributed, partly from RRF, or means, and also cohesion policy instruments. We know that there are other member states that are speaking with the implementing partners, with the Commission, on whether they could also contribute. So we expect this to play an important role in these last years of the MFF. Yes.
Maybe just to add that it's important to say that member states, when they contribute basically to the already established products. So when they put a contribution, they decide on which products they think that would be needed for their countries, and the resources are ring-fenced basically for that country. So the resources will be deployed within the country.
Thank you for that. There's one more question at the end.
Thank you very much. I'm Benedetta Venanzi and I work for Cassa Depositi and Prestiti, one of the implementing partners of InvestEU. First of all, thank you very much to all the panelists for sharing their perspective on the topic, and it's always very interesting to hear and to discuss together on what could be the future also of the next MFF. And in this case, my question is more actually a comment. I was very much pleased to hear about the possibility of business continuity for the next MFF on what has already been done under the current InvestEU. For us as implementing partner, I believe that's something very important, as you all know, and there were very high entry barrier, high cost at the beginning of the program to set up everything, and now as implementing partner we are up and running. As said, the midterm evaluation of InvestEU showed how successful the program is, and so we hope that it can continue this way. And of course, another aspect which is very important, as mentioned already, is the open architecture in order to be able to be together with our European partners close to the local needs as national promotional banks and IFIs. And in this regard, I would like actually to also welcome and thank the Commission for the simplification measures that have been put forward yesterday. And in this regard, I really hope that we can work together to make this proposal come to the co-legislator as soon as possible and make it approved in order to have those changes implemented as soon as possible. Well, I know I said it was a question, it's actually just a remark, but thanks.
So indeed, speed and simplicity are not only important with respect to the European and financial instrument offering to beneficiaries and companies like Holosolis, but also in bringing this through the legislative process. So I would like to thank everyone for the attention and for the questions, especially to the panelists. Summarizing a bit the instrument landscape, I would say, was more or less deemed adequate. Focus was more on cash, new cash, and better allocation of existing one. The point of innovativeness was mentioned, and from my point of view, it makes indeed sense because manufacturing is more mature and hence less innovative at large than what is usually under discussion. In terms of your questions, how to evolve, which financial instruments are they adequate? There were a few contributions from Pierre-Louis and also from Julia about the existing one. I hope that was satisfactory for you. And then the last point, which I noted, was on use of guarantee for early stage, which was also raised during the discussion. So with that, I would like to thank you and close the session for today. And hand over to, who is it, Svetlina, I guess? Yes. Thank you very much.